Ever heard the expression, the bottom line? Companies are very focused on how much they earn after months, quarters, and years. Making money is the biggest driver of any business. Investors, employees, executives, and more rely on the company's financial performance. You can say they live and die by this one principle. But how exactly do we know if a business is successful or not? Hi, my name is Nathan from Accounting University, and in today's video, I will show you exactly how the income statement works in 5 minutes. What is the income statement? Well, an income statement shows if a business made or lost money in a period of time. The most basic income statement, also called the single-step income statement, looks like this. Let's dissect it. First, we have something called sales revenue. Sales revenue is the amount earned when selling a product or service. What are expenses? Well, the expense is the cost of operating a business. And lastly, you have something called income or loss. It is the remainder after expenses are deducted. And here's some very basic rules that are really important. If revenues are greater than expenses, we have income. However, if revenues are less than expenses, we have a loss. Now let's dive into an income statement in an expanded view. Now you will see categories. We now have net sales revenue, which is taking your sales revenue and deducting your sales discounts and returns. For our expenses, it expands out into cost of goods sold. These are the costs directly attributed to the revenue earned. For operating expenses, this is usually related to administrative and marketing expenses. The expenses aren't directly related to revenue, but they're still necessary for the operations of the business. And lastly, we have non-operating expenses. These are expenses incurred by the business but aren't directly related to the revenue earned or operating the business. Very common examples of this are interest expense and income tax expense. As you can see the trend, every revenue deducts an expense and that equals an income. After we deduct cost of goods sold, we arrive at gross income. After we deduct operating expenses, we arrive at operating income. And after we deduct our non-operating expenses, we arrive at our bottom line, net income. Using what we just learned, we will build an income statement for a toy company called Tots. They manufacture toys for toddlers and are now taking a look at their income statement to evaluate their year's performance. To build an income statement, we must first look at a trial balance. What is a trial balance? Well, a trial balance lists out all general ledger accounts with a debit or credit balance. Let's jump into a trial balance so we can show you how it works. So we're going to use Tots Toy Company. As you can see, we have the left side as all accounts. In the middle is a debit, the far right's a credit. The debits at the very bottom, the 3, 4, 5, 500 have to equal each other. Now, for our income statement, we have to make it. So there's actually going to be a line that's going to divide what's on our balance sheet, our assets, liabilities, and equity with our accounts from the income statement. Here's the line. Now, we're going to make our income statement from this. We're going to use the bottom half. So we actually can ignore the top half here. So we use the bottom half here. And now let's jump into our multi-step income statement. We're going to make a full income statement from scratch. Now, let's jump into a multi-step income statement for Tots Toy Company. And the year is going to be ending December 31st. So our sales revenue, we're just going to bring this over from our trial balance of $116,670. Then we had some sales returns here. We're going to deduct that, $10,400, to reach our net sales of $106,270. Now, we have to deduct our biggest expense, which is our cost of goods sold, taking out $43,500. We move that. After moving that down, we have to go into gross income. So that's what's left over after cost of goods sold is actually deducted. Then we have something called operating expenses. We have admin and marketing expense here. I'm just going to combine them, have $29,000 deducted to get to our operating income. Before, you see the trend, sales minus income. Before, I showed you the trend. It's the sales minus expenses equals income, minus more expenses equals income. So you see the trend. Take out our admin and marketing to get $33,770. Then we deduct interest expense of $8,000 to get to our income before income taxes of $25,770. Every business is taxed by the government. In our example, the tax will be 25%, so we multiply 25% times our income before income taxes. So jumping back in, we take 25% times 25,770, and we get 6,443, and I rounded that up. From here, we deduct that out to get to our beautiful bottom line, net income of $19,328. And that's it. You just learned the income statement in 5 minutes. My name is Nathan from Accounting University, and each and every week I will give you easy, fast tutorials just like this one in 5 minutes. If you enjoyed this video, please like it so it reaches more people, and consider subscribing so you don't miss another one. Until next time.